So now we try to look at Dow theory with the BSE small cap index. Now this is the index which we'll be always focusing on because this is the best index. There are multiple reasons for it. We'll keep looking at it why we look at the BSE small cap index. But let us now try to focus on the Dow theory aspect of it. Simply put, higher tops and higher bottoms and then change of trend. So this is what we'll try to do. Try to understand how this functions. So look at this, we'll take this example of the BSE small cap breakdown in 2018. So in 2016-17, it was making a higher bottom, higher top. You can see a double bottom here also out here if you go closer. Continues to make higher tops and higher bottoms all through 2017. A classical bull market in play. Then you go into a very nice phase in the end where it goes a little vertical in end of 2017 and then you get the first vertical drop. Now this is what is a pattern which is basically which tells you all right, we've got the first bad hit, but do we go back again or not? So the first break lower top is when you realize all right, the momentum is waning off because every other time you made a bottom, you would go back faster to make a new high. That's your first indication. Then you get a lower bottom. This confirms the trend is now become weak or it is changing trends. And by the second or third bottom, you are very clearly sure that the trend has changed. It is no more the bull market. It could be either sideways or down. So somewhere here you need to realize that this is not the best of the times. All right. We'll see other indications also going forward where we'll try to catch this around the topping areas. But after this three bottoms, you know a downtrend has started. So you're making lower tops and lower bottoms all through 2018. And then you continue to fall a good 25-30% by 2019. Now, you start making a first attempts of a higher top and higher bottom here. When you are just about to break out about this consolidation zone of 2018 to 19, if you look at this small cap index, it was right on this verge of breaking this multiple tops of 2019 in 2020. And bang, at that time, you got a COVID correction. So this was the worst thing to happen for somebody who preempted the move here. Why? Because you got a nice rally and you were creating that hope that this accumulation phase will start into a bull market. But then out of nowhere comes the big bear market of 2018 thanks to COVID. Cannot cross this higher top. So the lower top bottom and then you get the fastest correction. Now, so this is how you look at the breakdowns. To simply put, why are we looking at this is, so this is what you want to do as a small cap trader or an investor. In a bull market, higher tops and higher bottom, as a trader, what do you want to do? You want to play everything. You want to be in small caps, you want to be in micro caps, you want to be in mid caps. As an investor, what do you want to do? Just stay invested, buy and hold. You don't need to trade a lot. Most money is made in a bull market just by holding as an investor. Then in the bear market, as a trader, either you go short or stay away. As an investor, sit on cash, increase cash allocation and keep sitting on it. In a sideways market, as a trader, you trade relative strength, look at oversold natures and take sectoral bets. As an investor, concentrate on the leading sectors. When I say this is in 2011 to 13, the markets were flat, but there was FMCG, there was pharma. In 2015-16, there was chemicals, there were textiles. So in a sideways market, also, if you are in the leading sectors, you can have a huge alpha. Now, let us take some older examples with the same perspective of higher tops and higher bottoms. So this is this first initial cycle in 2005 when the bull market started. Like we discussed before, you got a new all-time high on the Sensex, on the Nifty. You can clearly see this higher tops and higher bottoms, hardly any correction. Then you get the first correction. So you exit on this first breakdown. Then there is another fall. There is a deeper correction. Then it goes a little sideways. You could again get back in. You get a bull market, higher tops and higher bottoms, a good 20% move. Then in 2006, you get a first exit here, second exit here. You save yourself from this. So you want to be participating in these phases in 2005 and 2006. Then you get a nice start of a rally again in 2007. Now in this period, you get this superb move wherein if you look at this, the small cap index went from 8,000 to almost 14,000 in less than 4 or 5 months. Now this is the best period you can get as a small cap trader because everything goes up on circuits, etc. Then you get this first vertical fall And in this, the last swing low breaks, that is the time you want to exit. If not, at that time, somewhere in this period, you should exit the second bottom, the third bottom. So in that case also, the worst case would be, instead of 14,000, you will get out at 11,500 or at 10,000. But it will be still much higher than that 8,000 entry point. Now let us look at across cycles. After that 2008, 2009, you get this higher top here. Then you get another confirmation, new higher tops, participate in this period. Then on the way down, you will get an exit here. Then you wait, and you get an entry here. So either you will get an entry here at the first higher top or at the second. But between 2013 to 14, you got in purely on a simple technical rule of buying at higher tops. Now this is the point of time you want to be doing superbly well. You want to be participating large. Then again you get a range breakout. Same way, every time there is a breakout, you want to be participating. Then in 2016, something really nice happened. You crossed the highs of 2008 on the small cap index. And this was the best phase. This one and a half year was the superb phase. Then we looked at that breakout down in 2018. Same way in 2020, look at this interesting phase. The place where we topped out in 2020 before the COVID fall, the same was a phase of resistance here in 2020. Now this is very interesting. At this point of time, in end of 2020, this is where the small cap index is. It is still down 20-25% from the top, but the Nifty has already made a new all-time high. So classical case, Nifty into an all-time high, small caps also making a new 3-year high. And this is the superb phase. In this phase, you get a 50 to 70% move in the small caps. Right? Then you go into a sideways phase. We've been in this sideways phase for some time in 2021 to 22 for the small cap index, very similar to periods of 2015-16, and now we are possibly over the next year or so, this would eventually break out and you could again get a new rally. So you need to be patient and wait for those times again to participate heavily. So we've gone into this sideways phase between 2021 to 22 where we've participated in sectoral leadership. Now in the next 1 to 2 years, you'll again get into a phase which will be a beautiful period for small caps where you want to trade everything and anything. So that's how we look at Dow theory as well as the small caps. Using the simple rules of higher tops and higher bottoms, you know when to participate. So when do you want to participate? When the Nifty is in higher tops and higher bottoms, the small cap is in higher tops and higher bottoms. So that is how we look at the small cap index. Going forward, we try to bottle this down into much more technical data in terms of when to trade small caps. We'll go much more granular from the next topic.